Hello guys, welcome. Let me just put that back up on there. We'll get to the charts in a sec. Welcome to the Solid as a Stock session for today. My name is Becky. If you haven't joined us before, that's me, Becky. My email address is becky@traddictiv.com. I know that my head is in the way of that, but hopefully it's easy to figure that out. So becky@traddictiv.com. I'm just going to go through the disclaimers real quick. It should be being highlighted there on the screen. Of course, important for legal reasons that we put those up, but also important for you guys to understand that when we do these kind of videos, they are demonstrations of how we think and what we do and the technology that we use. It's just a demonstration. It's up to you whether or not you want to ignore it entirely, take it on board entirely, or something in between. Ultimately, it's your choice as a trader to decide what's right for you. So I'll explain briefly what we're doing, and then I'll come to this link here, which is tradewithufos.com/Becky, and just explain what that is for those of you that are new, if this is the first time that you're watching. By the way, guys, I'm looking at the chat boxes as well. I'll keep my eye on those. So of course, say hello, let me know that you're there. Let me know if you have a particular stock you want me to look at, particular ETF you want me to look at. Any questions on methodology, anything like that, just put it in the chat box, whether that's on YouTube or in the closed community, and I'll do whatever you guys need me to do. I'll help you in whatever way you guys need. So let's just explain the agenda. Of course, we've said hello. Now we are simulcasting. Simulcasting means we are on YouTube, Facebook, and our closed coaching community all at the same time. Now, you might be thinking, well, what's the difference then? Why would there be a closed coaching community if we're also on channels that are free? And good point. So what happens is, around about halfway throughout the stream, we will cut the stream to YouTube and Facebook and continue within the closed coaching community. Now, normally it's not based on time, it's based on if we get a trade done, then it'll be after the first trade. So that those of you that are watching for free can still understand how we're doing things. You still get the methodology, you're still explained as to how things work, you see us place a trade. But for those that are in the closed coaching community, you have had access to more of our time in that community to watch us place more trades and get more opportunities. So it kind of works out fair for both sides, whether you're paying for it or not. So that's how we do it. So at some point after we find our first trade, I will cut the stream to the free ones and continue within the closed coaching community. Hi there to Christian, just seen you said hello there, and also from Reg on YouTube. So hey guys, welcome. Again, let me know in the chat box if you want me to look at anything in particular. So let's just explain real quickly what we'll go through. Again, for those that are new that might not understand the structure of these things, we will go through market environment. We'll look at closed trades, open trades if there are any. For the closed trades, we'll have a look at what happened, how we may have managed that, whether or not it would have been cancelled, something like that. Trade management, open trades, are we going to move stops, are we going to close out positions? Then we'll look for new opportunities. To be fair, because we're looking at swing trading here, we tend to put 1 or 2 trades on in each session, so there's not much to go through here. Okay, so that's what we're going through today. Let me just bring up tradewithufos.com/Becky. There we go. The reason I bring this up is for those of you that are not already Trade with UFOs memberships, have Trade with UFOs memberships, then you can enroll there. So you just put your name and email and click for the next steps. It's a free membership, so you do it from there. You can also from this link book one-on-one coaching with me if you'd like. But for me, the most important bit is that once you have your membership, you can come here and ask a question in public as opposed to email me, which means that my answer is also in public. Other people see the answer. Now, of course, you can email me if you prefer to do that. But what's great about this is that it may be that the question you have, somebody else has already asked. Or it may be that the question you have is new, in which case you're doing somebody else that favor a little bit later down the line. So hopefully that makes sense. Okay, so let's quickly look at what happened last time, or what we put on last time, and see where it went from there. So we had a Facebook trade that we put on last time. And I'll just explain what the different colors are in the drawings that we have here. The black line, this one here, that was our entry line. The red line was our stop line. This first green line, that was our safety target, and then we had a trailing stop for our final target. Now, unfortunately, this trade never happened. So price never came in. It came close and then moved away from there, but it never actually hit our UFO. So at this point, we have to look at it and say, okay, would we still keep this trade on? Are we going to keep that out there and keep our orders waiting to perhaps be triggered, or are we going to cancel it? So let's just take a look at a few key factors here. So first things first, we do still have an upwards climate. If the climate had changed, we would 100% cancel this trade. So we still have an upwards climate, so that's great. I'm just going to look here and double check. No, okay, we definitely didn't get it, no problem. So we still have an upwards climate, so great. However, we have gone past the statistics. So for some people, if you're very, very strict, you may say, look, this market normally goes up for 7.02 candles. Going to round that up to 8 because you can't really have a percentage of a candle, so let's call that 8. And we're on candle number 11, so we've gone past now what is usual, which means we're lacking probabilities of a continuous move, so I'm just going to cancel that. If you're very strict, you may do that. But we also want to make sure, of course, that our EMA lines up with what we're doing. So with this one, we had daily on the left, 1 hour on the right. We want our daily EMA value to line up with our UFOs on our hourly chart. And it really doesn't. So our EMA value right now is 327, which is within this one. In fact, this may be a trade that we come back and look at later that we may take. So it lines up with a new UFO. So if price comes to this UFO, it's going to have to go through that EMA. We don't want it going through the EMA, we want them to coincide. So we would cancel that trade. If we still have that trade waiting, we will cancel it. So what I'll do is just delete that, so it's all off of the screen there. It's not there anymore. Of course, if you'd place this trade in a live brokerage account or a demo brokerage account, you would go and cancel that. So perhaps whilst we're here, we may as well look at taking this trade here, taking this one that does seem to line up, and that way we'll go through the methodology start to finish, and we'll then move on and look at something else. Now, what you might want to do as well, and perhaps we'll bring it up, if we go to FX Street Economic Calendar, you might want to check this out as well, just to give you an idea of volatility that could be upcoming. So if you go to this economic calendar, I believe that the time zone that I'm in, it's in GMT time, so you could change the time zone, but obviously you guys are probably watching from different parts of the world, so you could change it here if you want to, but we'll keep it in, it's actually BST that it's in now, so the time in the UK, essentially. So let's look at this week. So what's upcoming? In fact, let's look at next week, because it's Friday. Let's look at next week. And let's just click apply for a second, and then what we'll do here is we'll come to filter, and we want to scroll down a little bit and only highlight high impact. Of course, you can highlight impact that's lower if you want to, but the lower the impact, the less it does stuff, so the less important it is. Now the last thing we're going to do as a filter, because we're mainly looking at US stocks, is just highlight US. Again, if you trade in the UK or other parts of Europe or Australia, Japan, wherever you're from, or the markets you trade in, by all means select those two. But the ones we go through, they are US stocks, so we'll look at US. So now by filtering that, when we first looked at it, we had a really long list that we had to scroll to see. Once we filtered by high impact news and just US, we're left with next week, Thursday and Friday. Which means any trades that we put on now, if they trigger between now and that time, shouldn't be affected by scheduled news reports that should create a lot of volatility. Of course, sometimes unexpected things happen. Sometimes a pandemic comes out of nowhere and creates issues. So, of course, this isn't to say definitely nothing will happen in the next few days. It's just based on what's scheduled to come out. There's nothing scheduled that could cause high impact until next Thursday. So that's helpful for us. Okay, so let's go back to Facebook and we'll go through our system start to finish and perhaps place this trade. Now you may notice I'm using a 1 hour chart here. We could look at a 55-minute chart if we want to, which is actually the Fibonacci number that we would actually use in this case. The reason that we use 55-minute instead of 60-minute, if we can, sometimes it depends on the memberships you have with your brokers and the platforms as to which timeframes you can see, but usually the Fibonacci numbers perform a little bit better as timeframes than the standard ones. Usually, not always. You can check that using TradeStation's UFOs if you want to. So let's look at our 55-minute chart, because normally that's the one that we would use anyway. So first things first, we're looking down here, auto climate. Why are we looking down here? Because first question we should always ask ourselves is, should I buy, sell, or do nothing? That is the first question that we ask ourselves. If we're not answering that question, what are we doing, right? Because when we go into the markets, we only have two actions. We can either buy or sell, or we do nothing, which is an inaction, right? So if we're going to act, it has to be buying or selling. Now, I think that a lot of people, let's just highlight this, a lot of people don't like that because we're so used to in life exchanging time for money. And so we think if I'm doing something, it's more likely to work for me. For us, it's about probabilities. If we don't have enough probabilities, then we're wasting time and wasting money by placing a trade that is less likely to work out for us. So if the stats and the probabilities tell us to do nothing, we do nothing because we're more likely to save our time and money by doing that. So first question is, should I buy, sell, or do nothing? And the answer comes from AutoClimate. If you're new and this is the first time you're watching this, AutoClimate is a free app. You can download it on TradingView or TradeStation, MetaTrader now as well. So AutoClimate scans through the markets, comes back and tells us in the series of these coloured dots, ignore the lines for now, with these coloured dots, whether or not we have probability up, therefore we buy, probability down, therefore we sell, or probability nowhere, in which case we do nothing. So it's very, very easy. It's 3 different types of dots we can look at and they answer each of those questions. So if we have a thick blue dot, probability up, look to buy. If we have a thick red dot, probability down, look to sell. If it's a thin dot of either colour, doesn't matter the colour, but if it's thin, not enough probability either way, do nothing. So it's very, very simple. We're using technology to answer that question. We don't need to be thinking about it and analysing it. It's already answered for us by our technology. So now that we've figured this out, we can have a look at this example that's in front of us right now. We're looking at Facebook right now. By the way, like I said, guys, let me know in the chat if you want me to look at a specific stock. We can go through that. If not, I'll come to the scans after we've done this when we continue in the closed coaching community to see more. So we'll put this Facebook one on now for those of you that are watching on YouTube or Facebook. So we have a thick blue dot. That tells us we should be looking to buy. We have probability upwards. So do we just go and press buy, whatever the price is right now? Probably not a good idea. That's not objective. It means that our entry price has everything to do with the exact moment we happen to be sat looking at the computer or phone, whatever you're on. It's not getting in or out based on objectively where we have probabilities, where the risk is lower, where the reward can be higher. So we need to answer the second question now, which is, if I buy where, or if I sell, where? When I say where, I mean where specifically in price. Which price point do we buy at? If we're going to buy, which price point do we sell out if we're going to sell? So AutoClimate has already told us we should be buying. Great, we'll stick to that. So AutoClimate is telling us that we're buying. So we need to use what we now have on our charts to help us figure out where precisely. Now, how do we answer that question? There are loads of ways to do it. So those of you that are watching, if you're veterans of this this methodology, you know what we do here, what technology we use and what methodology we apply. But of course, there's loads of different ways to trade. You could have your entry points based on crossovers of moving averages. It could be breakouts of particular areas. It could be support and resistance lines. It could be patterns that you see, cup and handles and those kind of things. It could be Fibonacci retracement lines. It could be a whole host of things. There's probably thousands of different ways that one could come to the conclusion as to where they're going to buy or sell. Now, that can be overwhelming and confusing, especially if you're new to trading. My advice to everybody is just pick one. Pick one and test it. If you try and layer too many things over on top of each other and you try one thing and it doesn't work for 2 trades, so you try another one and that doesn't work for 1 trade, you try another one that does work for 1 trade and then it doesn't for the next 3, and you change what you do all the time, you won't be able to figure out what actually works for you and what makes sense. So pick one, whatever it is. For us, we use our app, which is the AutoUFO app. Now, AutoClimate was a free app. AutoUFOs is a paid-for app. Depending on which platform you use, depends on the price of it. For TradingView, it's $34 per month. By the way, it comes free if you take our courses for 3 months. So we have AutoUFOs, and what AutoUFOs are doing, that's what this little, I know UFO, you might think, oh yeah, it's a little flying saucer, that's a bit weird. UFO actually stands for unfilled order. Essentially what this means is we have stacks of buy and sell orders in the markets that are showing us, that the app is showing us, are sat there waiting. Now, why is that a good thing? Because in order for the app to pick up these buy orders, there has to be a lot of them there. If we want to buy where there's lots of other buying going on. Because if there's lots of other buying going on, especially in the context of an upwards climate, where we have probability upwards, if we buy around here, where these numbers, and it's showing us on the right hand side here, specifically the range of price. If we buy in that range of price, then we're buying with lots of other buyers, which means it's more likely to push price up. More buyers than sellers pushes price up. More sellers than buyers pushes price down. So if we're selling, then we'd want to sell UFOs, red ones. When we're buying, we want to buy UFOs, which are these green ones. So you might be thinking, okay, great, I got it. We've got UFOs. That's where we actually buy or sell at. So you've got one UFO here and one here and one here. How do I know which one to take? How do I know which one to place? Is it just the closest one? Is there something else that goes on here? Now, there is something else that goes on here, which will determine not just which UFO we place, but whether or not we place this trade. It's this third element here that we really need to pay attention to. And that's something that I kind of alluded to a little bit earlier on, which was our EMA value. Now, the current EMA value on the bigger time frame here is 327.04. Now, why do we care? Why do we care about an EMA value? Well, EMAs, and in this point, it's EMA 9. So it's looking at it's a 9-period EMA. EMA, I just got hit in the face by a fly. That was weird. EMA, exponential moving average. That's what that stands for. Essentially, it gives you the average of the movement over the last nine days in this sense on this chart. And it's exponential because it puts more weight on the last data points. Now that's important only because other people think it's important. There are lots of people that use this indicator to help them enter trades. So in theory, what people do, so the EMA is here, and let's use a different color for price. Price is here. In theory, if price moves down and hits the EMA, buyers come in. Because that's a theory that people are using all over the world. Not just retail traders, but fund managers as well will sometimes use EMAs to help them enter positions. So, if we have probability upwards with our climate, so buying pressure, we have a big stack of buy orders here, and the EMA is also within this, comes in at the same price, and we have buy orders come in from the EMA as well, then we've got buying, buying, and buying. More buy orders than sell orders pushes price up. So the more buyers we can have around that area, the better. So hopefully this makes sense. So what we need is for our EMA value on the bigger time frame, because it's normally the bigger the time frame, the more orders there are. The EMA value on the bigger time frame needs to coincide with our UFO on the smaller time frame. So let's just take a line. Let's make this really simple here. We'll put a line in, draw it randomly, and we will just type in the value. So the value of the EMA is 327.02 now. Of course, it's moving average, right? So it moves. As price moves, it moves. So as you can see, it's nicely snug within that UFO. So great, we've now answered all these questions. We know that we're buying. Climate has told us that. We know that we're buying a UFO because we should buy at UFOs, and we're buying at this one specifically because the EMA coincides with it. So what we'll do is we'll go and place this trade. So, you with me so far, guys, by the way, as to how we got to this point, why it is that we're placing this trade? You might have questions around time frames or things like that. You just let me know. I haven't kept my eye so much on the chat box. Let me just take a look here. What do you do when the 9-day EMA is between two UFOs? Really good question there, Christian. So, let's say, for example, the EMA is here. So, it's in the middle. With that, we would say, move on. Find a different thing to trade because it's not lining up. Now, I always say in my sessions, and perhaps for some people it's frustrating that it's not, I'm not telling you exactly what to do here. I'm a strong believer in testing things and building your own plan that works for you. Yes, take the structure that somebody else has given you, especially if you're new to it. But you may be more conservative or less conservative. You may have more money or less money, more time or less time, which means you have to mold that to suit you ultimately, otherwise you won't keep doing it if it doesn't suit those criteria. So if you are more conservative, then you would say, you know what, the EMA is between these UFOs. We've got one here and one here, EMA is in the middle. It's not lining up with either one, move on. That would be the stricter, more conservative way of looking at this, because you don't have all of your probabilities in the same area. You could be somebody that says, I don't care about the EMA, I'm just going to buy at UFOs. That would mean you have way more opportunities, you place way more trades. The probability of them working goes down, but as long as the maths works out, you might even make more money than somebody that's more strict. You may make less money. It depends on how the probabilities work out, your risk to reward and things like that. You may be somebody that doesn't have UFOs, doesn't want to have UFOs, and you just go for the moving average and you just take that as it is, and that's fine too. For us, our rule is it has to coincide. So if it's between, it's not coinciding, so we don't take it. Now let's say our EMA value was there, where I've just drawn that random line, and we had a UFO just below it, right? So just underneath. What that would tell us, if this comes with maybe a little bit of practice or a little bit of just seeing it, we know that the EMA, clue is with the M, it's moving. So as price moves, the EMA also moves because it's tracking the movement of price. So let's say price were to fall. By the time it coincided with this UFO that we drew, then our EMA is likely to have moved down a little bit and is likely to have actually aligned there. So if it's really close to a UFO, like just above it, if we're buying, if we're selling, it would be just below it. So if the EMA number is close to a UFO, then we may anticipate that they'll coincide. If you're not sure, you can set alerts so that you can check it once price actually gets closer to it and see whether or not it does align. If it's just in the middle, like this one, which is kind of in the middle of nowhere and not close enough to either one of them, that price moving would align them together, you just move on and you move on to the next one. So I'm just reading that question there. What if there is one UFO but the EMA is elsewhere? So again, the stricter answer is, so let's expand that a little bit, right? So we've just got this UFO here and we've got our EMA there. So they're not coincided. The strict answer to that is do not trade this, move on to something else. Look at a different opportunity where those two things do align. That's what we would say with our methodology, and that is the stricter way of applying it. Like I said though, there's nothing wrong with saying, you know what, waiting for those two things to line up means that I'm only placing a trade or two a day if you're swing trading. And I want to place 10 or 20 a day because I'm more impatient, or I'm less concerned about the probability being as high as it can possibly be. As long as the probability still works out to be profitable, I'm not so bothered. Then just take the UFO, or just take the EMA, or Fibonacci numbers, or whatever you do. But if you're following this methodology and you're following it strictly and you want to have your probability as high as it can be, then you would want them to align with each other. You want those two things to be together. If they're not, then you don't place the trade, you move on. Now, you may, if you're even more conservative, add more things in. So there may be some people, for example, with this, we know here that our stats have gone slightly over. Normally this market goes up for 8 candles and we're on candle number 11. So you may be somebody that says, as soon as it gets to 8, I'm not trading it anymore. So now you've added an extra variable that makes it even more conservative. That increases your probability, but decreases your opportunity. So there's pros and cons of each. If you said, I don't care if this number is 105 out of 8, doesn't bother me, I'm going to place whatever trade, then great, you place more trades because you have less variables that are ruling out opportunities. So you have more opportunities, but your opportunities will have a lower chance of working out. Now, you may say, as long as overall it works out profitable, I'd rather place, let's say, for example, if you're really strict, just to run the maths on this makes a little bit more sense. Let's say you place 5 trades because you're being really conservative and 3 of them work. So you have a 60% chance, if my maths is right there, 60% chance of being right. And let's assume that they all work at, when you lose 100, and when you win, you make 300. Okay, so 60% at a 3-to-1, brilliant. Now let's say by being less conservative and by taking your trades based on whatever's there, or just taking UFOs, or just taking EMAs, not caring about the statistics, being a little bit more lax on your rules, you may place 15 trades now within the same amount of time because you have less things ruling them out. But maybe only, 7 of those are right. So you've got just below a 50%, isn't it? Let's call that, 45? I can't do the maths on that, but let's say 45% chance of being right. So your probability has gone down now. But let's say you're still risking 100 to make 300, then you're still making money if you're right 45% of the time. So it's not that higher probability necessarily. It's not this number that necessarily means you make more money. But you may be somebody that says, I'm not okay with being wrong more than half the time. And that's a personal thing for you. So depending on how you see these numbers, and some of you will be watching this and going, why wouldn't you do this all day long? I'm okay to have less trades if I can increase this number. Great. Some of you might be saying, who cares? Who cares? I'm going for this one. Because if you do the maths on it, perhaps overall you make more money because you place more trades. But you have to be okay with being wrong more often. Some people go, oh, I don't care. As long as it works out in the end, I don't care. That's a personal thing. So if you're more conservative, you're more likely to have something like this. If you're less conservative, more lax on your rules, you're more likely to have something like that. So to come back to the question there, what if there is no UFO at all? Again, our answer would be, don't place the trade. We only ever place trades because we have a UFO and the EMA lining up together in the context of the correct climate. That's the only way we place a trade. So for us, the answer is if there's no UFO, there's no trade. Move on to a different time frame or a different market. The great thing with stocks is that you have thousands to pick from, and ETFs and things that you can look at as well. So it's not too big a deal necessarily. If you look at particular opportunities and don't see a UFO, you will find them on other charts. This was a random example. I hadn't anticipated this, but on looking at a trade that we put on last time that we cancelled, we happened to see that another one appeared, and it worked out with this one as well. So it doesn't need to be that it's so difficult to find a trade. Sometimes it is. Again, you may be somebody that says there's no UFO at all, but I still need to be placing trades. I want to place more. I'm less patient, or I'm more comfortable with risk, or whatever it is. In which case, you may just say, I'm going to place a trade at the moving average line. And you go in at market, and so you might have a scan that tells you when you're very close to the moving average, or you might have a rule that tells you that you look at I don't know, Fibonacci numbers or breakouts of this. You look at other ways to get into trades, or you can play about with calibration and time frame until a UFO appears. I wouldn't recommend that because you're changing variables every time you do that, and you want to be consistent on the variables that you do use, but that would be a way to do it as well. So like your probability thinking, I monitor this in my account all the time. Yeah, good, because again, it's not, I know a lot of people want to be right all the time, and not just in trading, in life, right? We are taught at school, you have to get over a certain percentage or you fail, or you repeat the year. And if you get over this percentage, then you're amazing, right? And normally those percentages are what, 60, 70, 80, 90%. They're all above 50%. That you have to at least do okay. And so we're so used to needing to be right very often, especially if you come from a career or a profession where maybe you're an engineer or a doctor or something like that, where again you want to be right consistently. With trading, sometimes you can be wrong more than you're right and still make money, but you have to be comfortable with that in order to actually place the trades and go through with that methodology. If you're not comfortable with it, then you have to add more things in to add probability, but by default that will decrease your opportunity and may overall decrease the amount of money that you make. But it's going to feel more easy for you, it's going to be more comfortable, and you're more likely to stick to it. That's ultimately the best thing, is what are you more likely to stick to. So hopefully that makes sense. Patience is good. You follow tradictive advice most of the time. Yeah, great. Patience is good, although I would say we cannot, if you're impatient as a person, if one is impatient as a person, much harder to make yourself be patient than it is to adopt a methodology that allows you to trade a lot. If you're an extremely patient person, then you may add more things to this and have one trade a month, but it has an 80-90% chance of being right. For other people, they're like, no, I want more trades. And so they'll play about with these numbers until they find something that's more sensible for them. But I agree, patience is good. Virtue, as they say, seldom found. So coming back to this trade, we do have our EMA lining up with our UFO. So that means, I'm just going to delete this line so that we're not confusing ourselves. That means this is the trade that we'll place. So I'm going to just get my Fib retracements and I use them as a drawing tool. Do it all the way around. So I'm not using them as they were intended. These aren't being used as Fibonacci numbers. I'm using them as a drawing tool just to make it really obvious what we're looking at here. So what I've done is I've just taken that drawing tool, and you can use lines if you want, horizontal rays, horizontal lines, whatever. Now I've double clicked on them and brought up coordinates so that we can just type over what the coordinates are using the numbers that are given to us by the UFO. So So if you see this top green box here, it says 329.69. So that would be this one, 329.69. That would be our entry. Now our stop loss, we're going to use this bottom number, which is 325.18, and I'm going to take off 10 cents just to give it a little bit of wiggle room. So 325.08 would end up being the stop. There you go. So I use the drawing tools, double click on it, type it in there, coordinates, just so it snaps there and it's really easy to see. Now, once we know, and by the way, you can come over here and double check. It's obvious now that our EMA is definitely within that range, of course. So I'm just going to squidge down. It's going to be the same situation, I'm sure. We're not going to have any final target with this one. We're going to trail our stop because we don't have UFOs on that bigger time frame there to help us. So we'll work out our safety target, which is easy. So what we'll do is we'll come over to the order panel, click buy, 329.69. That will be our entry price. Our stop loss will be 325.08. Now what I'm going to do here, by the way, I always assume that on each individual trade that we place, it's a $50 risk, because we're going to place 2 targets, so 2 trades. It will go in as 2 separate trades. So the overall risk is $100, but because we're placing 2 individual trades, it needs to be $50 and $50. So all you do is just type in $50 and it will tell you the amount of units that works out to be. $50 is the top one, so it won't let you, it will say 10 there. 10 shares worth will make me risk $46.10. If I do 11, then it's gone over my $50 limit, so it won't let me do that. So it will take it back to 10. Then what's really easy about this is you just click take profit. It's already worked out the pips. In stocks, of course, we don't have pips, it's in cents, but essentially it's the smallest increment of price. Our safety target is 1 to 1 away. So we just type in the same thing. So you notice as I type that in, this number changed to 1. It's a 1 to 1 target, really easy. And then it just tells me what the price is, figures that out for me as well. I don't need to do any maths on it. So I'm just going to take another little line here, draw it randomly on the chart, double click on it and just type that number in. So again, it's really obvious what we're doing there. There we go. So that would be our entry, stop and safety target. So what you would do is you click buy and it would just go in, and there you go. You've got your limits all in there. Now for our second target, our final target, we usually put it where the opposing UFO would be, where the rival UFO would be on the bigger time frame, but there isn't one. So instead we're going to have a trailing stop. So what that means is we'll have the exact same entry, 329.69, exact same stop, 325.08. It's remembered it. Exact same risk. We'll put in $50 again, comes up to 10 units, but we won't put profit in. We'll just click buy, and now I've got 2 sets of entry orders, 2 sets of stop losses, 1 set of target, so 1 target. And then what will happen is if we're right, let's say price comes in and it moves off in our favor, and then it creates a UFO, our second stop loss that we have down here will move up to here. And then as price moves up and it creates a new UFO, we'll take our stop loss from here and we'll move it here. And that will be how we manage our trade, how we lock in the profit for that second target. We'll take it as a trailing stop behind UFOs. So I'm just going to put a little note on this so we remember. So today is the 4th of June. I know for some of you guys in the States it's the other way around, but for me, 4th of June, 21, final target, trailing stop. And there we go. That is a trade start to finish. So for those of you guys that are on YouTube and Facebook, hopefully that made sense as to how we did this. And I know we digressed a little bit explaining some things, but again, hopefully that made sense as to how we do that, why we do that, why you might be more strict or less strict depending on how you feel about things and how you think about things. So now we have our trade in. This was a trade on Facebook. We first checked that we had probability upwards from our climate, thick blue dot there on the auto climate, so great, probability up. We then looked for UFOs in order to take an entry. We found a UFO here, and then we made sure that it coincided with the EMA value, which it does. So we'll just come over here. There you go. We coincided the EMA value, which is somewhere in between there. Now we have everything lining up, so we place a trade. We had 1 target at 1 to 1 away. and our second target was a trailing stop. So let me know on YouTube, guys, if you have any questions on that. Otherwise, what we'll do at this point, now that we've gone through a trade start to finish, we've explained the methodology, we've placed one, you guys have all the numbers and stuff, I will cut the stream to YouTube and Facebook unless I see any last minute questions come in, and then we'll continue in the closed coaching community there for those of you within there if you have more questions, and we'll look at scanners on TradeStation and look for more opportunities as well. So I can't see any questions come in on YouTube, so I will see you guys next time. I'll be back on Monday morning for the market commentaries. We send out an email every day with information on 5 major world markets, so I'll see you on Monday if you tune into those. Otherwise, the stock session will probably be in a couple of weeks' time. You can check the calendar. Again, if you have questions, you can email me if you'd like, becky@traddictiv.com, or come here, tradewithufos.com/Becky. Get yourself a free membership if you don't already. You can book one-to-one coaching with me if you'd like, or you can come down and ask a question in a public setting so that I can then answer it in a public setting and everybody gets the answer in front of them. So there we go, guys. I'm going to cut the stream to YouTube, and we'll carry on in the closed coaching community. Give me a sec. It takes a couple of seconds for each of these to sync, so I'm going to be quiet for a few seconds as I do this.